Hello.
Hey, how are you?
Hi, John. How are you?
I'm doing well. Is it Sylvia?
This is Sylvia. Yes. So
Oh,
that's,
yeah. Hi. How
yes.
are you?
I'm good. I'm good. How have you been?
I've been well, thank you.
All right.
Yeah,
So today Daisy's gonna do the hosting. Actually, what I'll do, I think you have some slides on you, right?
I do. Yep.
So I'm gonna make you host so you can be able to share your screen.
Great.
Just a minute.
hmm
Participants, and then I make you the host. Yeah. So I've changed the host. Let me call
Great.
Daisy, see how far
Okay.
she is.
Great.
Okay. So she says she's gonna join in 10, but I think we can just start. Um, are you still with the Rethink group team with Denise?
I've pivoted away from Denise. I still do some consulting with them, but I'm kind
Oh,
of doing my own thing now.
okay. Oh, okay. That's good. So you went into private consultations.
That's right.
All right. Okay, because I think we've interviewed you before. We already have your trading bio with us. So we're just
hmm
gonna dive right into the webinar. Maybe just
Great.
refresh our memory on how long you've been doing performance coaching, and I know you have a wide pool of clients and where you're based, and then we can get right into the today's topic.
Beautiful. Yes. I had my first year on the trading floor was between my freshman year and sophomore year in college. That was when was that? 1989. So I've been around markets for a long time. I was traded on the floor of the Chicago Mercantile Exchange starting, I think it was in 1994 or 5, and traded on the floor until about 2012 or 13. And then I've been trading off the floor ever since then. During that off the floor trading, I started doing coaching. I think my first client was in about 2016. One of my first clients is still with me. I work with people, helping them understand themselves better to make better risk decisions. Um, it also is helpful that what I do helps in everyday life as well. And so I've taken classes in modern psychoanalysis. I think I have about 50 hours of credits in modern psychoanalysis. And also, I've pivoted into kind of neuropsychoanalysis, which is designed by this guy named Mark Solms, and it combines Freudian analysis with predictive coding. So our mind is always predicting what will happen next. And he also, with that, he does some um, uh, one of the other pillars is this guy named Jaak Pansep came up with drive systems and the chemical and neural pathways that are consistent in decision making. And so I've been pivoting into doing a little bit more of neuropsychoanalysis. And my client list is wide ranging from retail traders to professional portfolio managers, to hedge fund managers, to analysts, to C-suite executives, to professional athletes. I worked with NASCAR pit crew teams for a few years and some professional baseball players. And so, yeah, I have a wide range of experience with decision making in all aspects of high pressure, high consequence situations.
All right, that's a very good introduction, and at least it gives us an insight into your background in both trading and also in coaching as well, higher
Mhm.
performance coaching. So maybe Daisy, I see Daisy's here. Daisy is gonna be like the host for today's session.
Great.
But you can take some time, like 20 minutes, to go through your slides, and then we'll see if we have questions from our community that they had sent earlier on. Daisy's gonna throw those questions out to you in the Q&A session.
That sounds great. And as I go through this, feel free to go ahead and ask any questions, stop me.
Okay.
Whatever is most useful and helpful, that's what I want to do here. All right, so let me get this going. Okay, so we're going to talk about routines today, and the routine stack is the way I think about things. Um, and so for me, my kind of catchphrase is chaos is my calm. That's what my Substack is called. And I love the idea of finding the calm within the chaos of the market. So there's always a pattern going on. And as part of that pattern recognition, routines are for me part of that. And so if you don't know what your routine is controlling you because we all have routines. We all do things consistently similar ways over time. And so, this came from a Bridgewater quote, 400 analysts at Bridgewater, kind of trying to figure everything out from a fundamental standpoint and other standpoints. And they get 40% of their trades wrong and maybe even more. And so for me, that kind of pivots into the edge is in two things. One, in our system and understanding and being able to repeat our trading system setup, whatever that is. And the other is from ourselves, our bodies, the little whisper in our minds, which we could talk about, those sorts of things. And so routines are not a productivity hack, they're nervous system management. So the better we can manage our nervous systems, the more consistently we can make decisions. And it kind of, I kind of grouped it in four main areas: physical, mental, emotional, and then trading, even though I think physical, mental, and emotional are directly involved in trading. But, it's kind of setting yourself up to make the best decisions in real time. Um, and again, I think of things in edges. So stacking each edge or advantage or opportunity on top of the other, for me, creates an exponential opportunity set. So the physical routine, the hardware, the body, movement is a way to kind of relieve stress or relieve, um, energy. I think of emotions as energy. And so when we are in an emotional type of thing like trading, I believe trading is inherently emotional. Uh, and I think that's a good thing. I'm not saying that we need to kind of change our feelings, but intensity of feelings need to be vented. And there are a few ways to do that, but I think the most direct way is through moving our body. And this is just some just general guidelines. And this idea of your physical routine. What is your movement before the opening? For me, oftentimes one of the routines I like to have is, depending on how active a trader you are, when a trade is over, I like to get up, physically get up, walk around, turn around in a circle, whatever it is to kind of reset everything and then go back. If you're trading super high intense quick, then maybe that isn't quite as useful, but definitely standing up, definitely feeling your heartbeat, definitely, even doing a few jumping jacks or something to reset. I find that it's a great reset. Um, and again, it connects us with our body, which as we go on, we'll see that that's important. And here we go, mental routine. So again, the mental routine is about preparing our mind to make decisions. And so going through your setup. What is your setup? Okay, when these three things happen, that's when I take action. And just reminding ourselves of that setup before the opening or before the trade starts happening, depending on when you trade. And so again, for me, it's prepare, reflect, and calibrate. So prepare is, your general view of what could happen during the day. Also, part of this is mental maps. So when we have a mental map, especially with a trade, the more it matches that mental map throughout the life cycle of the trade, the more spot on we are. When it starts to diverge from our mental map, for me, it's about reevaluating the current moment, not reinstating the initial setup. So again, this is the reflect and calibrate. So we reflect on what's actually happening. And for me, one of these moments was I noticed over time that when I was in a trade and it was in that middle area where it wasn't quite going, but it wasn't bad, I noticed that I would say to myself, oh, that's why I have a stop. And then I would wait for it to get stopped out. Over time, I realized, calibrated, I realized that when I had that combination of a middling trade in the middle of the life cycle of the trade, and I said that to myself, I realized over time that those were trades that just got stopped out. So when that combination started happening, I would then take action. And then, again, this mental map, does the pre-market checklist include your mental state or just the price levels? But also then does your pre-market map include or how does that play out during time, during the day, that mental map, but also that mental state. Are you ready to trade? Are you excited about trading? Are you, nervous? I also think of a life cycle of a trade, and oftentimes, primarily retail traders, but most traders have this cycle of confidence where, initially we take only the really good trades. And then we trade most of the good trades so that we're making money, we're doing a really good job. And then I've noticed over time that I then start to take trades that are good enough. And then the P&L starts to go down. And then I go and reevaluate and I say, oh, well, I was taking too many trades that didn't specifically match my setup. And so then again, it's the not taking all of the trades, taking all of the proper setups, taking more than the proper setup, or staying in longer, or not managing our system, whether it's targets or stops. And that cycle kind of plays itself out over and over again until we realize that, we really need to kind of create that mental map or mental state of I am going to stick to the system. These are the things that kind of make it for my trade to happen. And then the emotional routine, kind of what am I feeling and maybe why. And that kind of that idea of emotions have both information and energy. Emotions are not the enemy, they're information. Um, Yeah, and on the floor it was easier to feel that energy because all the screaming and yelling, and you can kind of hear the differences in cadence of up markets and down markets and busy markets and slow markets. And obviously that's we're less able to hear that in the markets, but I like to look at trading action and try to imagine what's going on. What are the other people feeling? There are times when you could see that there's nervous price action. People are stuck. But then there are also times where you could see that, price action is pretty constrained. It's a nice back and forth. And so depending on your style, some people like breakouts. I'm a breakout guy. So I like it when markets start to move, the price action increases, volatility goes up. Those are markets I like. Others like kind of this back and forth mean reversion trades. And so again, understanding what game you're playing, what style you're trying to operate within can also then map to your emotional routine or your emotional style. And for me, I like to think of this level of arousal. And it's a range. I think of it as 1 to 10. And I operate best within kind of the 5 to 8 range. I like to be more excited than not excited. And so when I realized that when I was too excited or caught up in the action of the markets, I didn't quite trade as well. But I also realized if I was too calm, too relaxed, too, trying to make sure that I didn't get excited, that was no good for me either. I have to have a little bit, as you can tell, I kind of talk a little bit fast. I'm generally excited. And so, for me, I noticed that if I wasn't excited enough, my trading went way down as well. Um, oh yeah, and then this case study, I had a client who realized every August that he didn't trade very well. And he also realized he kind of sheepishly brought it to me. He said, I know this can't be true, but I said, oh, great. Tell me about it. He said, I notice every August, my birthday's in August, I come in, I really want to kind of have a good August. And then, I think the market really should give me a birthday present. And we kind of unwrapped it a little bit more. And we realized that, he wanted a gift from the market. Once we were able to understand that, he was able to kind of, I think that August, where he had the courage to finally talk to me about it after a few years working together, he was able to make a little bit in August, and the first time in 5 years that he didn't lose money in August. So again, these little patterns, these emotional patterns are in there if we pay attention to them. Uh, and then, this idea of emotional state. Are you excited? Are you a little bit down? Yeah, I've noticed that sometimes excitement can lead to too many trades. Sometimes cautiousness can lead to missing the first good trade and then responding to that by taking the next so-so trade and losing money and getting stuck in a spiral that doesn't have anything to do with your setup, right? When the emotional spiral starts to happen, oh, I missed that. I need to take another trade to make up for that. That emotional spiral starts. We want to kind of dampen that down as much as possible and certainly realize as it starts to happen. And then a trading routine, notice what you do. For me, I liked to have that quiet moment before the market opened. I would do my preparation and be ready for what was going on, and then have 5, 10 minutes just to kind of sit back and just understand what I was feeling, what was going on. You know, did I spill coffee on myself on the way to work? Did I get a good workout, a bad workout, whatever the case may be, and just kind of understand where I was. And also, what's the setup for the market? Is it going to be busy? Is it going to gap at the open? Is it going to gap higher, lower? Uh, Whatever the case may be. And then, really then sit down and say, okay, what is my setup? What am I looking for? Um, and kind of play a couple scenarios out in your mind before the market opens. And then, understanding how you feel. Am I excited? Am I, angry? And for me, getting those out in some way, I think of it as having kind of internal and external balance. If we keep everything inside, um, then our internal world can kind of at times diverge from the reality of the markets. But if we're always kind of getting that out, which brings me kind of, some people are internal processors and some people are external processors. And with my clients, I try to figure out which they are and try to, for the internal processors, get them to speak more. For the external processors, ask more questions to get them to think more. So if you're an external processor, that getting up away from the screen and just thinking about something other than markets, quite honestly, because sometimes those processors get stuck. For the uh, internal people, I try to get them to speak. External, slow them down. So, and then the post, you really need to do a post. Um, you know, is the trade part of your sample? For me, I had a system that was doing okay, and I tested a year's worth of data. I went through every trade for the previous year and realized that it wasn't operating according to the back test, so I cut the system. For me, I also realized that, this is a while ago now, but I would keep it in a notebook, my P&L in a notebook, and I realized that when I had 4 or 5 days where I didn't put in the information, guess what? That wasn't a good period. So I realized I really needed to make sure that I went through and did that every day. And so here's kind of the stack, the trading, the emotional, mental, and physical. This isn't necessarily hierarchical. I think they're always working within. Certainly, the mental, physical, and emotional kind of interact. And the trading is kind of the expression of those. For me, a couple other things that I like to do, or I like to meditate. I think that helps me quiet my internal voice that gets a little crazy at times. Um, Again, the physical for me is able to express some of that frustration I may have, vent those emotions. And then the mental is kind of playing through those scenarios. All right. And so here we go. The physical is the easiest entry point. Build the stack from there. Identify your movement practice. It could be anything, from walking to running to kind of jumping up and down, push-ups, whatever the case may be. Uh, and then, try to get the emotional check-in. A great tool for this is to have um, a list of emotion words and really try to get down to whatever that proper word is. I noticed that when we get to the best word, the energy of the emotion can dissipate and it can help us refocus our mind back on what's important. In the case of trading, the setup that we're trying to kind of go. And then again, really understanding your numbers, understanding what your best trades are, what your worst trades are is great. And then adding in the next level is adding in kind of the intuitive type of feeling. But I don't think that can be done properly until there's a repeatable system that's understood. At least that's my personal opinion. So I think, yep, that's it. So I feel free to ask any questions or whatever comes up. I'm happy to kind of go wherever you guys want to go. And let me stop share. There we go.
Hi, Daisy. Daisy, do you have questions for John? Oh, she's left. Okay. So
Oh,
I would like to touch a little bit on emotions and how they're a tool that can, if effectively used, can be able to communicate something. Maybe you can touch a little bit on FOMO and greed because most traders
mhm.
do experience those two strong emotions and how they can use them to their advantage.
Mm, great questions. Okay, so the first one is how we can use emotions. So our body is always giving us emotions. The way we make decisions are based on past experience and emotions that we have in our body and mind. And so that's just, they're always operating. We can't make a decision without an emotion. As far as FOMO goes, for me, FOMO, when we focus on the system or our setup, it can help alleviate FOMO because we get it down to a point where, when these three things happen, whatever they are for you, um, I, the simple moving averages cross and a high is taken out. Right. The faster one goes over the slower one and a high is taken out. I'm assuming that's your setup. So once that happens, the opening of the next bar is when the trade is taken. And then the stop goes again. For me, it's just this iterative process of, okay, here's my setup. What is my setup? Take the setup. And I've noticed with my clients and myself, the more clear we can be about what we're trying to do, the less FOMO happens. Again, I think FOMO generally is not about the market. It's about something that's happened in the past, um, meaning a trade or an experience. And the more we can focus on the moment that we're trying to execute, I believe the less FOMO we'll have. Now, grit's an interesting one. Um, and I think grit is great, but again, needs to be applied like all emotions and all things that we do in the appropriate manner. So again, Using grit to execute our system is great, right? Using grit to kind of stay in or stay in a position that we know we shouldn't be in, that violates our stop, is not grit to me. That's ignoring reality. So I've had that experience before where um, I've been in a trade. I usually say stuck in a trade, but I wasn't really stuck in a trade. I just ignored my stop level. And so I was in a trade that was bad. And I remember distinctly thinking to myself, I'll lose the whole account before I get out of this trade. I know I'm going to be right. Thankfully, that didn't last very long. I was able to get out pretty quickly after that. But, grit is great when it's applied in the proper direction, which is to me is doubling down on our confluence of events to take a trade. Um, and I think it's misapplied when we try to take more trades or do something that isn't referenced to the market. So I hope that answered the questions.
Yeah, for sure. That
Y-
does answer the questions. Daisy,
Sylvia,
team.
I'm back.
All
My
right.
apologies.
That's
Yeah.
okay.
Daisy, any contributions, any questions for John?
I really enjoyed it. It was very practical, and I feel like it's usually the once you master your emotions, that's usually like the part most of us need to master. But my question is, what are your main confluences? You
Oh,
mentioned the exponential moving average and that you like continuations. So, what would be your favorite confluences in your strategy?
in my strategy. Okay, excellent question. So for me, I use a three time frame approach. I use a monthly, weekly, daily. And I generally try to get a daily pullback into a weekly level. And so for me, that is, I use market profile as well. So it's generally a pullback into both a moving average on the weekly, which is backed up by kind of the mode of the market profile of the profile, and combining that, right? So that's a pullback in a weekly trend, which means generally I'm looking for the market profile to scoop. So if you know anything about market profile, its price is built up below the market. So the market profile level will shift down on the daily. And once that shifts down on the daily and the weekly is still around the moving average and also at the mode of the market profile setup, then I look to buy it with a stop below a swing low. And I'll try to take that trade to the high, the top of a Keltner band on the daily and watch the daily weekly interaction. And then I usually peel some at the top of the Keltner band or Bollinger band. Um, and then I'll move a stop. Once I take some profits, I'll move a stop, generally to break even. And then I try to see if the weekly can really start to push the daily. And if it shifts into a weekly trade, I'll shift up. So again, that's kind of how that's one of my setups that I watch. And for me, it's about the market profile generally, and in market profile language, the sellers are in control on the daily, but it's a location on the weekly where buyers could come in, and so I'm watching to see if the buyers come in by watching the daily and sometimes the 4 hour to see if that gives me an indication that the buyers will come back in. So, generally it's a pullback in the trend. I also have a breakout trade that I do generally to the upside, generally on kind of a rectangle type of setup, but I'm super aggressive on my stop there. Um, and I'll only take that on the breakout or uh, the retest breakout. So I'll try those two levels, and if those don't work, then I'm done. So I don't know if that was helpful, but that's kind of how I think about things now.
Thank you very much. That was very insightful, and I've understood. So it's like kind of the formation of the candle as you're on the time frames that you're looking at.
I'm sorry, say that one more time. What do the candles look like?
The formation of the candle on the time
Yeah.
frame that you're looking at as well.
Yeah,
Like
so
the 1 day and the 1 week that you said.
yeah, I'll wait for um the weekly. It could be within the week. Generally, it is within the week on the weekly candle, the existing weekly candle. On the daily candle, I'm looking for, I definitely want on a pullback buy, I'll definitely want a green candle or some evidence that the break is over. I won't just buy a break. I definitely wait until I see some buyers start to come in and then evaluate how the best to enter that by usually going down to a 4 hour. And for me, the 4 hour should be showing a decent amount of buyers coming in. So the weekly will be at the middle of the range, the daily will be at the bottom of the range basis, the daily, and then the 4 hour would be more in an kind of an uptrend, if you will, and I'll look to get a pullback within that uptrend. So I'm basically buying a pullback on the daily in the weekly uptrend and a pullback on the 4 hour on its own kind of uptrend. For me, that's the kind of the bars that I'm looking for, the story that I'm trying to see, that the weekly buyers are potentially stepping in. The daily sellers are in control generally on the daily, and then on the 4 hour, the buyers are giving it a go. And so that's the story I like to look for. And for me, it's more about, price, the story of who's in control. Um, I think of it as a bunch of people trying to figure out where the market should be. And so that's the story. I like to have these narratives in my mind.
Thank you.
Absolutely.
All right. Maybe you can also emphasize, you did touch a little bit on meditation and
Mhm.
the chaos that we have in our minds and the importance for meditation. So, would you recommend people to do meditation before market analysis, before they do basically their analysis, or before they start trading, or what times would be best
Hmm.
to meditate?
Yeah, so for me, when I was able to kind of understand what I was feeling, the chatter in my mind went way down. It made it much easier to meditate. So I think understanding what we feel, what our mind's trying to tell us, and externalizing that with journaling or speaking things out loud, I think is step one, at least in my process. And then I was able to meditate much more easily because there was less chatter. Although I did meditate when there was chatter. So for me, I liked meditating in the morning. I like meditating in the morning. I still meditate in the morning. I have an app that I use that's like a Zen meditation. So it's some guided meditation. I do that some days a week. And then other days, I do a meditation where I just let my mind go where it's going to go. I notice when it starts to get wrapped in a story, and then I try to release that. But again, for me, I think meditation is about understanding how my mind works rather than trying to empty everything out of my mind. I know it's impossible to do that, and so I don't try. I just kind of either do a kind of a guided meditation or that meditation where I just let my mind go where it's going to go and just see what comes up. I think when done well, it's a glimpse into our unconscious. And so, one other thing I will add is those random thoughts that we have, brushing our teeth, walking the dog, whatever, about the markets, I think are important and we should collect them. I believe they're kind of like a dream where, if we don't write down the dream, at least for me, it's gone forever. I think these little kind of glimpses into the unconscious about trading or trades or setups or whatever is our unconscious kind of giving us glimpses. And also back to meditation, I think the more we can meditate, the more comfortable we are in a meditative state, the more kind of permeable that membrane is from this kind of subconscious to conscious. So I think, if you can meditate for 5 minutes at a time in the morning, great. If, you trade all day long, then I think it could be helpful to take 5 minutes at lunch or whenever you take a break and just sit and just focus and just let your breath come and go and just, breath work is great as well. Box breathing, breathing in for 5, holding for 5, breathing out for 5, holding for 5. I think that's a super helpful practice that I do a lot of. So,
Hmm. All right. Thank you so much, John, for your
yep.
input. I know we've learned a lot. I'm gonna share this with our trading community on all our socials. Lastly, where can people go to find your work? And where are you basically?
Yeah, I have a Substack. It's if you can find it by typing my name, John Burns, into the Substack search. It's Chaos is my calm, as I mentioned. You can reach out to me via my email, and that's jpb at optin-consulting.com. Feel free to reach out. I do some LinkedIn posting, although not as much as I would have liked. And so really the Substack and reaching out via email is the best way to get a hold of me.
All right. You will send me those on email and I'm gonna link them on the show notes as well. So thank you
Great.
so much for your time. Would love to have you again in the future where you actually take us through like a live practical example
Oh,
of
yeah,
your trading with a
absolutely.
little bit of what you touched on today. So we'd love to host you again and we want to thank you for your time. Daisy, any last parting shots to our guest?
No, thank you. I'm eternally grateful. It's been an amazing session.
All right.
Thank you. I appreciate it. Thank you both so much. I really enjoy doing this. So I'll be happy to come back anytime.
All right. Bye-bye. Enjoy
All
the
right.
rest
Take
of
care.
your day. Goodbye.
Thanks. You too. Bye now.